This video is about the impact of student loans on your life. And it's basically a video that tries to encourage you to look at the reality of what a student loan is. It is not a gift, it is a debt that can be crippling to you and your family. And as a service member, you want to definitely be sure you know what impact it will place on you. I've created this student loan video kind of in reverse. I put all of these warnings at the beginning, and then over into the end of the video, I talk about how to recover from student loan debt and some caveats and some things you need to understand about student loans, like the concept of discretionary funds. Most people have no clue what that is. A student loan contract can be as thick as this book that's in this image, with little time bombs on every page. You must try to figure out how to reach your goal of education without taking out enormous amount of student loan debt just because you can qualify. Student loan debt is just that. It is debt. Every student loan you take out has to be repaid. You're looking at 20 years sometimes or longer trying to pay that debt off. The interest sometimes can be crazy, but as a military person, you are guaranteed 6% interest. But the more you put in deferment, the more interest you add to the end of the loan. And it can be just frightening trying to get it paid. It took me 20 years to pay for my degree. Finally, I got a job and I had a $10,000 loan. And still, almost 15 years later, I still owed $4,000 on that. So I finally just took out a loan because it was actually cheaper to take out a loan at the credit union and pay the debt off because of the interest. So please, as you listen to this video, keep in mind as a service member, you have many, many options. You have many benefits, but it will not excuse you from that debt. So learn from many people's mistakes. And if you are already in debt, there are some ways that can help you, but the debt has to be repaid. Student loans, they start out with good promise and hope for a better future. They are not threatening. It's all sounds good. They're easy. You fill out the paperwork. Student loans, we start out with so much hope for the future. It's sweet romance, and we're just thinking about how great things will be in the future. But sometimes we don't do enough research. The one thing many times young people and our military personnel don't think about is if you don't pay that debt back, because it is a debt. We just see the student loan paperwork that we sign up for when we get our student loan. Here you can see what the federal government and what the institutions who give you these loans require of you if you don't pay the debt. It is not a gift, it is a debt. If you don't make your student loan payment or make your payment late, your loan may eventually go into default. If you default on your student loan, that status will be reported to the credit bureaus, and your credit rating and future borrowing ability will be damaged. And in addition, check this out now. Legal action can be taken to require payment through garnishment of wages and withholding of your tax refund. You can get your income tax refund with a little slip inside that tells you that your refund has been applied to your student debt. So it is not something you can evade, but what you can do is be sure you know what you're getting into. Be sure you work to keep these loans in deferment. You want to work to make sure that the default status doesn't happen. So the best way to protect yourself is to take out as less amount of loans as you can. This thing is not to be played with. It is great, but it is a tool that must be used correctly. Now you want to know about your credit report. What does student loans do to your credit report if you do not pay them back? The Fair Credit Reporting Act states that, as you can see here, that private student loans remain on your credit 7.5 years, while federal student loans can be reported indefinitely. Please consider what you're doing before you get student loans. Do your research. As a military person, you have the access to education services on base, you have access to legal counsel. Try to get the education you need and the advancement you need in ways where you will not incur this debt. As I said at the beginning, it starts out sweet, but it has to be repaid back. It is not a gift, it is a debt. A lot of times, student loans would put people in such straight places they look to file bankruptcy to try to get some relief. According to the bankruptcy law, you need to understand. That's why I added this little part right here. Filing bankruptcy with student loan debt. Should you file for bankruptcy, often none of your student loans will be discharged. Listen to me clearly. Do not believe people when they say, "Oh, I filed bankruptcy and I got rid of my student loans." If they filed bankruptcy before 2005, that may be true. But as you can see from here, due to a 2005 change in the law that gave private student loans the same protection as federal student loans, which have been exempt from discharge since 1978. The word protection in this case means student loans debts will often survive bankruptcy. The word protection means that the debt will not be discharged if you file bankruptcy. They figure we will excuse all your other debts so you can pay us. Money plus college equals debt. Graduating is up to you. You do not have to graduate, but you will still have to pay that student debt. Remember, college funding is not a gift, it is a debt. As we saw from the other screen, money plus college equals debt. There is no way to not return that investment. This is not a gift. You must repay your loan even if you don't complete your education, you don't even get a job after you leave school, or you do not like the education you have received. These are not valid reasons for having the debt excused. As you've seen from the previous slides that have discussed the ramifications of having student loans, this portion talks about if you have student loans, how do you handle them, the deferments. So, what we're going to talk about here is not how to get financial aid, but what we're going to talk about is how to help you if you find yourself in a situation where you have all of this student loan debt. So, these are some options for military personnel, things you can do to help you. This financial aid debt is a serious thing. This whole video is basically to warn you. I know I sound like a broken record, but this is a video to warn you of the ramifications of getting that money. You have to pay it back. I have included two definitions of student loan. A lot of times we think we know what something is, but I just want to be sure you understand once again that a student loan has to be paid. The companies that loan you the money, they do not care about the circumstances, and there are various requirements in the contract that you sign that stipulate how the money is to be repaid and when. So here's one that talks about receiving your textbooks and paying for your tuition. If you look at the last part here, that's in red and it starts with this in the sentence it starts in general. Students are not required to pay back these loans until the end of a grace period, which usually begins after they have completed their education. Some loan programs will give you a couple of months after graduation, not until you get a job. That's what you have to be sure you understand when these loans come due. Here's another definition of student loan. It says an agreement by which a student at a college or university borrows money from a bank to pay for their education. The key word is borrow. And as you continue reading, it says, and then pay the money back after they finish studying and start working. They do not wait for you to get a job. Sometimes it can take you a year or longer to get a job in your new field. And as military personnel, if this is education for advancement in the military, or are you leaving the military, you want to take all of these factors into consideration, because you will have created a great deal of debt for you and your family. So you want to definitely know what you're doing and make sure that you have a way that if you do not get a job right away, you will be able to make that monthly payment on that loan. Recovering from student loans is something we do, unfortunately, too much in this society. The educational system has become so expensive. That's why at the beginning I did this video kind of in reverse, to tell you how dangerous student loans are and that they're not benign as they often appear. Please give due consideration. We're going to look at some options on helping you with recovering from your student loans, but there is no easy way out of this debt. The best protection you have is to be mindful on how much debt you enter in to acquire your education. Okay, this portion of the video talks about the interest rate for military personnel. You should be getting on your loan a 6% rate. This is mandatory. This is covered by your SCRA. And so all pre-service obligations should be covered. Student loans while they are on active duty, and even if you are leaving the military, it's up to 180 days after you leave, and it can be applied retroactively. So you want to make sure that you're getting the correct rate. So you want to make sure you contact your servicer. But the main thing, you want to talk to someone on post in your education department, because many times the servicers do not provide correct information. So you want to definitely know what's going on, who your bills are going to be coming from. But the main thing is to be sure that that loan has a 6% interest rate. There are a couple of things you should know about student loans. The federal student loan reductions are automatic. That's that 6% on that interest rate. Those are automatic. They should be applied to your loan when you sign up. But I strongly recommend checking, because many times the servicers do not use that 6% rate, and you will be charged an exorbitant rate, and it will make your payments high. So make sure you check to make sure that they have applied the 6% rate that the service member is qualified to receive. Now, the private ones, you're supposed to submit paperwork and request it. Once again, make sure you do your due diligence and check with your servicer to be sure that this has been applied. The private loans will probably request, information about when you started active duty. But the main thing in both situations, you should follow up to check and make sure they send you paperwork showing that that is the rate. Do not just take the person's word that you're speaking with on the phone. This particular requirement is for zero interest if you're in a hostile fire area. This is something that started in 2008 that you're entitled to. So if you're going to be deployed, prior to deployment, I would definitely check to let your servicer know, that's the person that you've got the loan through, whoever that is, that you're going to be deployed, and make sure there's the necessary modifications to the loan so you will not be paying interest on that loan. And if you go on deployment, or you're listening to this video and you've been on deployment and you back, that can be added retroactively. So you would definitely contact your servicer. That will save you an enormous amount of money that will have to be applied to your account. Now, this is a little tip they give, and it says you can receive the 0% interest rate for up to 60 months, and it can be applied retroactively, as I said previously. So, you want to make sure that you follow up with this. And as this little tip says, even after you've left the military service, so you want to definitely follow up on this. Okay, this is about the Perkins loan. This is a way that the Perkins loan gives you a reduction in your actual loan if you're deployed. As you can see from the screen, if you're deployed in a hostile area for 12 months straight, you may be eligible to have their loan balance reduced for each qualifying year of service. And even if you're out of the military, you can apply for this retroactively. That's what our little tip tells us. Active duty or reservist. These are the ways you get your deferment. National Guard and reservists can request deferment when you are called to active duty during time of war, military operation, or during a national emergency. Now, regular active duty personnel, there is a little caveat to that. Down here at the bottom, it says, remember, for those serving on active duty, you must also be serving at a duty station at which they are not normally assigned. So there's a slight difference to get that deferment. This is an example that helps explain the concept of normal duty station. Okay, it says a service member serving at Fort Campbell, Kentucky, who is then deployed to Afghanistan or Iraq would be stationed away from their normal duty station. And now you could actually request a deferment. Other scenarios such as training periods or moves and various other issues that might come up, they suggest you talk to your loan servicer. My suggestion is you talk to someone on post before you talk to the loan servicer. And then after you talk to the loan servicer and they give you the criteria, go and talk to someone in education services to make sure they are giving you the correct information. We're going to talk about repaying the debt. As I said in the beginning, this is a debt, not a gift, that must be repaid. The Department of Education has come up with some new plans called income driven repayment plans. And as it says on the slide, it's based on income and family size. So, what you want to look at before you sign up for one of these, you want to make sure you go to your financial planner on base to talk to them and your education services department, because all of these plans are not a one size fit all. And also, it says here they are also qualifying plans that may help you achieve eventual loan forgiveness under the Public Service Loan Forgiveness Program. So, there are some things to be considered when signing up for these plans. This next plan deals with a 15% cap on older student loans that can help borrowers who have loans that are very expensive. As it says here, the IBR sets a low monthly payment based on your income and family size. If you have older loans, your loan payment will be capped at a 15% of your discretionary income. Now, my question to you will be, do you know what discretionary income consists of? It is not the money remaining at the end of the month after you pay your bills. This next plan is income driven as well, but it focuses more on more recent graduates, and it also has additional information about this plan on consumerfinance.gov's website. And as it says here on the slide, is a newer repayment plan that is likely available for your federal student loans. That's the key. You got to make sure that your loans qualify for the plan. And this particular plan caps your monthly payment at 10% of your discretionary income. This next plan is a modification of the pay as you earn. It has a new, how can I say, nuance to it that will help you, and it's called revised pay as you earn. If you're not a recent grad and don't think your loans are new enough for pay as you earn, you should look into the repay E, which also capture income at 10% of your discretionary income. You can get a lower payment if your federal student loan debt is high compared to your income. That's what I was saying at the very beginning. Why it is so important not to take out more loan than you will be able to pay for. These debts are debts, not gifts. They have to be repaid. So even when you're thinking of taking out one of these plans, you want to make sure you talk to your financial manager on base and the education services department, because all of these plans do not fit everyone, and this concept of discretionary income may not be what you think it is. This is a note that was in this presentation that I thought was very important, so I added it. And it reminds us about these income driven repayment plans that there can be little caveats. And as it says on this slide, it said when considering an IDR plan, keep in mind that if you ultimately don't qualify for the PSLF program, that's the debt relief for the loan, paying the reduced monthly payment due under an IDR plan could cost more over the life of the loan. This is why you need good counsel to get out of this situation and to make sure you make wise decisions about future educational requirements. So, talk to someone in educational services and your personal financial manager to discuss your options, because you could actually generate more debt in the long run by signing up for one of these lower payment plans. The information on these plans is found on the studentloan.gov website. So you don't have to worry about where would you find the information. You can get that readily available on this website. So be wary of organizations or emails or texts or things you see on YouTube or whatever, people promising you a way to get out of your student loan debt. There is no quick fix. If you have signed up for one of these loans, it is a debt that must be repaid. So you need to talk to your financial manager on post or your servicer or your education services area. But I would always talk to your education services office before you talk to your servicer, because your servicer may not always give you correct information as a military person. I went to the website, the studentloans.gov's website, and looked for that little calculator for pay as you earn, and there is one there. If you would look at this little calculator, I screenshot this paid portion of their little calculator on the screen, and they asked about the loans and all of that. But if you look to your right, it asks about your tax filing status. These loans will include your wife's income if you are married. That's why you definitely need to talk to your education services office on base, because these plans might not be the best for you. You definitely want to get good counsel before you go on this website and sign up for one of these plans thinking you're going to reduce that loan debt. So please get wisdom and counsel before you try to do this on your own. Now, this is another portion of that little screenshot from that payment plan calculator. And as you would notice, it asks about the loans. which loans are included. If you hit that little drop down box, it lists all these different loans. But what you have to understand is this next part, which is very sobering. It says if some of your loans aren't eligible for a repayment plan, the estimated payment for that repayment plan won't reflect the total amount that you would pay on all of your federal student loans. So you could get in a IDR, plus you would still have to be making other payments. So you may have an IDR payment of $100, and then you may have another loan payment of $250. You will still have to make both payments. So definitely please get the right kind of insight, get the right kind of information before you sign up for one of these plans. Now, this one is a way if you're deployed to be able to take care of your paperwork in a timely fashion. And sometimes that timely fashion has to be your time, not the company, not the servicer. So this Heroes Act waiver gives you coverage in case you cannot get information into your servicer on time, especially if you're on the IDR. That's what this is all about, because they're basing your payment on your income and your family size. So if you had any kind of change in that status, you have to recertify every year. So this is something that could come at a very inconvenient time. But if this does happen, please have someone in your family, or even if you're going on deployment, I would definitely give your servicer a call and let them know that I'm going on deployment. So, especially if that recertification time is coming close. But if not, this helps protect you from your loan going into default. I added these next couple of slides to this video because the word discretionary income is used repeatedly in these opportunities for income based payment plans. But if you don't understand discretionary income, you may make the wrong decision. I added these next couple of slides which explain discretionary income. I thought it was very important that you know and understand this so you can make an intelligent decision about these IDRs. So basically what they do, discretionary income is based on your family size and the poverty level. So if we look at the example they have given in this explanation, it says suppose your house size is 3 and you make $42,135. If you look in this little table down below, you will see that the 3 family size or household, the poverty level is $30,135. Well, that's the amount of money they figure it takes for you to survive as a family of 3. Basically, since you make 42,135, you're above the poverty level. So what they would do is, as you can see from this example, they subtract the 30,135 from your salary of 42,135, and they come up with the discretionary income of $12,000 per year. That's the money you have left. As you can see, they do not calculate anything in here in basing extra expenses. That's why understanding discretionary income is so important when picking an IDR. Now that we have your discretionary income for the year, to calculate your payment for your IDR requires the monthly discretionary income. And so let's look at the example that we have already started that helps explain that. Okay, the discretionary income now will be divided by 12, and it will come up, as we know, with $1,000 per month as discretionary income. Now, if you're on the IBR, your monthly payment would be $150. If you're on the payee, your monthly payment would be $100. That's why it's so important to understand the discretionary income and your discretionary income so that you can make the right choice for the right IDR. So please get good counsel and information from education services before you go on the student loan website and sign up for one of these plans. This is the caveat to the discretionary income and the seriousness of discretionary income. As I said earlier, it has nothing to do with your bills and other factors in your family. And this is the statement on how student loan discretionary income is actually considered. If you look at this last paragraph, it says, unfortunately, these factors are not considered. And the factors they're talking about are medical bills, child support, or other private student loans. Do not at all change your discretionary income. As it said it up here at the top, it says there are many other factors other than your family size that determine how much you can afford to pay on your student loans. So please get good counsel, discuss with people, that are knowledgeable about these things, not with your loan servicer. Get information from the base. Talk to folks in education services because many times the servicers will not give you accurate information because you are military personnel and they may not understand all the different nuances that affect your life. So please get good counsel. I added this slide from the Department of Education about discretionary income and their definition of discretionary income. As you can see, it is basically the same. It deals with the poverty level, the family size, and like we saw in that example earlier, it didn't actually mention the state of residence, but when you looked at the little calculator, it did ask for your state. So it's basically the same. Either it's 150% of poverty level or it's 100% of poverty level. So what you want to really do is before you sign up for these IDRs is to make sure you understand what your discretionary income actually is, because you may find yourself with an IDR and a bunch of other student loan debts to pay and other things that can cause you great financial harm. So please get good counsel before you sign up for these IDRs that supposedly will lower the payment, but sometimes it may not be what you need. We're going to take a look at loan forgiveness. This program provides loan forgiveness for service members and veterans, and it has certain requirements. The balance of your student loan after working in an approved public service occupation for 10 years can be forgiven. Now, this little tip here provides information that under certain federal rules, this income is not taxable. For example, you had $60,000 in debt. You paid it down over the 10-year period to 30,000. Well, the 30,000 is not considered taxable income. So the federal government does not tax that money. There are three requirements that you will need to qualify for loan forgiveness under the PSLF program. One is only qualifying loans are approved. They have two types of loans that qualify for this program. It's called the federal direct loans or the direct consolidation loans. And they say if you don't have one of these loans, you can basically get a new direct consolidation loan. But our little tip kind of gives us a little warning. You have to remember that if you do that, you see here at the bottom, you could lose your 6% interest rate on your loans because your loan will no longer be considered a pre service loan. Number two, it requires a certain type of payment plan. You have to have a qualifying payment plan. So, as you see here on this particular little note, it says you must have 120 qualifying monthly payments. Only payments made under certain plans count as part of this qualifying requirement. The IBR, the PAYE, the REPAYE are the three best qualifying payment plans because they actually do reduce your monthly payment. So the 120 qualifying monthly payments, that's 10 years of payments. Now, our little tip lets us know you don't have to make those qualifying payments consecutively. But say, for instance, you have to pay the 120 payments. Well, say, for instance, you missed a couple of months or you were late on one. These payments all have to be made on time. Our little tip tells us that within 2 weeks of the payment due date. So, say, for instance, you have your 120 or your 10 years. Well, in that 10 years, if you've made any kind of late payment or any missed payment, you would have to pay additional payments. So, for instance, your 10 years might stretch out to be 12 years or 13 years because you have to have those 120 on time payments. This is number three. This one requires you to be sure that the employer you select for your public service is actually approved. So you would want to check on post with your education services department to make sure, and then call your servicer and compare those two lists because you must make 120 payments while working for that employer. Now, your our members on Coast Guard, you can work for the Department of Defense or Homeland Security will qualify. Now, under this program, you are required to submit a form that is completed by your employer. There's a section they have to complete. It's called Section 3 to submit that to your servicer so that you can be enrolled in this plan. I have added this slide about private student loans because they work a little differently. So, most protections for federal student loans do not apply to private student loans. This is so important. So, a lot of times you think that you can get deferments and different things or forgiveness for debt that's the same as the federal. Please do your due diligence. You want to make sure you get the promissory note and check what the opportunities they have to assist you. If you have not had a problem with needing a how can I say assistance or a deferment with your loans currently from your private institutions, I would definitely take that promissory note to your legal department on base or education services and go over that to make sure you know what your benefits are or what you can do in time of emergency. Thank you so much for listening to this video about student loan debt. I created this video for our military personnel to remind you that it is not a gift, it is not a grant, it is a debt that can follow you even when you leave the military. Please think about other options for advancing your career goals. Look into community service, look into journeyman programs. Try to come up with ways to reach your goals without acquiring a lot of debt. Do what I did. Take classes at a community college and transfer to the university of your choice. But you want to do your pre work. You want to contact the university you decide to go to. Make sure that the classes you're taking at the community college will be transferable towards your degree. Seek every other option you can before getting in debt for education because it can be crippling as you try to survive if you don't get a job in your field right away. And you have to remember you're coming out with a degree and it's like you're starting over. So when you fill out your application, you put your resume together, you just got your degree. So people are looking at folks before you who have more experience. So you're competing with more senior professionals in your field. So you really want to do your due diligence because as a service member, you don't want this advancement to be crippling to you and your family. Thank you once again. And I hope that this has helped you make a good decision.